everyone, John Henry here, slingshotfutures.com, and welcome to the Daily Futures Market Outlook, where we take a look at our Big Six markets and get ready for tomorrow's trading. Our main goal is to create and formulate an attack method for tomorrow as best we can with what the market is telling us to do. In this case, this is going out for the 28th of April, the final trading day of the month. So as we approach the end of the month here, at least for the trading side of things, and we start going into the weekend, that's where those monthly levels really start to kick up a notch. So you got to be careful around those. But before we jump into all the fun stuff, as always, make sure to swing on over to slingshotfutures.com, scroll down, and click on the Join the Daily Outlook newsletter. That's going to add you to the email list so that you know every single time one of these videos comes out. Along with that, we talk about different stocks and different statistics and all kinds of fun stuff to keep our eyes on. Now, along with that, at the bottom of the page, every single day, we talk about both market psychology, and we also post our live trade room morning prep levels every single morning for all of the big six markets. So really good resources to have your eyes on, get your hands on, if you will, in the blog post section at the bottom. If you haven't done so already, make sure to click on the live trade room subscription and trial info and give our room a shot for a day. See what we're all about. If you really enjoy it, you can sign up with a subscription basis for a week or a month at a time. And of course, if you join as a VIP member, the live trade room comes packaged together with that membership, so you don't have to worry about ever paying anything ever again. Now, starting off, we have the Bund, and the Bund overall, with ECB President Draghi speaking today, obviously had a lot of an impact on the market. We had a quick little dip down into a quick snap higher, and this was actually part of our market psychology video today, talking about a couple opportunities on this rise higher. And man alive, if you caught even one of them, you're a happy camper, because this was a gorgeous move to the upside with any runner targets. Now, this upside movement, we have to assume that they're going to get a little bit, not necessarily lazy up here, but just kind of quieting down a little bit, right? Taking a step back for a minute and saying, okay, we've added a huge amount of value to this market. We have a lot of contracts that are still in long. There hasn't really been any signs of profit taking yet, aside from this little end of day wedge here. If we continue this could kick off tomorrow with another gap and another continuation. So we really have to pay attention to where we open up tomorrow and what happens, because if we get a gap down, that may just be a chance for some profit taking. But because there hasn't really been any signs of profit taking, other than this little bitty pullback, which is maybe, what, 10%, if that. If we open up with a gap down tomorrow, that could be seen as another buying attempt to finish the job off to the highs. And if that is the scenario, then you expect to see a boatload of profit taking off at the highs, because it makes sense in that type of scenario. So very interesting kind of scenario that we're finding ourselves in here. Without much of a sign of profit taking, I have to assume that there are a lot of buyers that are still in this market. And if we open gap down anywhere below 162.03 to 161.99 or lower, I'm going to assume that there's going to be some buying pressure right off the start to finish off the move back to a retest of the highs. Now, over on the euro obviously had a lot of fluctuation today as well. Good old Draghi throwing on the microphone, throwing the markets for a loop. Big rip higher into a big drop lower, and really didn't accomplish a whole lot in the grand scheme of things. If we zoom out here, we can see that we really haven't detached much from the past several days. We had that big gap higher over the weekend, and we're just sort of edging our way higher, getting a little bit weaker. I can't even draw the channel on there, it's so shallow. So you can see, I mean, we challenged the lows. They broke through it a little bit, but then came right back up again. So we're not really getting a big sentiment to the upside or downside. We're just kind of getting stuck here. And with this just kind of stuck movement, well, this whole area may just end up being a big old range, of which inside we have that first candle of the week coming into play. And you'll notice, just outlining that first candle of the week, like we said when we came in on Monday, this area is going to be a big level until we start breaking down and filling this gap. And well, so far, it hasn't really failed in that sense. Tons of resistance inside here, more right there, nice resistance there. When we broke out above it, good chunks of support through here. So that area of that first candle of the week, right there and right there, those are the big levels that you really have to keep your eyes on. Now, we are near the lows of the range, and because we're not really showing much sentiment to the downside anymore, outside of that big fluctuation lower and then a failure to continue, what I'm looking for here is initial selling pressure around that earlier area of support and resistance. That's going to be between 91.40 down to 90.76. But If that begins to fail and this wedge gets a breakout to the upside, I would look for a quick ping off of that 92.88 area to then use that area's resistance now as support and push the market back up. The main reason behind it is we have a monthly level right there at 94.90, and that would be the major objective to the upside, considering that we are rounding off the end of the month. I would love to see another test of that level going into tomorrow. On gold, mostly range bound. We really didn't get a whole lot done today. We started off a little bit higher, and you know, we just kind of faded into what happened yesterday, right? If we look back a little ways, we can see we haven't really left yesterday's range. We're still stuck in the same area, and if anything, we've actually constricted a little bit into a tighter range. So there's a lot going on here, but it's mostly just back and forth. Buy low, sell high, stay out of the middle. And this one level that just does not want to get out of the way, that monthly level of support here at 64.2, continued to cause a headache today. That was the same thing that happened yesterday. They tried getting away from it, failed, tried running away from it there, and then they failed right back to it again. So we just cannot get away from this monthly support. And it makes sense going into the end of the month, but man, I really am looking forward to when we are away from that 64.2. It is causing all kinds of a headache. So the area where we're in right now kind of appears as though it's obviously a range, but we also have somewhat of a little flag forming here. And you can see that flag formation nice and clear, good flag pull, little flag formation. Now, because we're in a range, generally flags are going to be shallow breakouts. If we do get continuation to the upside, I wouldn't expect much more than a little breakout, maybe to retest the top at 68.4, and then from there looking for resistance back down. I have to assume, given the last several days, that we are going to get messed up around this 64.2, and it does seem to have quite a bit of gravity to it. Every time we get away from it, we get sucked right back down to it, and vice versa, back up to it. So that level could be a big one going into tomorrow's price action, so you got to be careful around that monthly level. Over on the bonds, nice upward momentum at the end of the day, but kind of stalled out a little bit around yesterday's close, yesterday's high. Couldn't really get away from it. And we're kind of forming a slight range with a kind of a breakout momentum on both sides. The range high looks really good, right around that 152.27 with a low at 152.18. But we did break out of it for a little while, down to 158.07. I'm sorry, 152.07 on up to 152.10 or so. And then on the high side, we have 152.30 up to 153.31 or 32 as the high edge. So we're in a range. We're looking to buy low, sell high, stay out of the middle, and right now we're kind of in the middle. So gonna have to give it a little bit of time here and see if we can get away from this. Again, it's hard not to see it. We have a huge level of monthly support coming in right there at 152.03. Yesterday, that's where the market got really messed up around, and even a little bit the day prior. I would love to see another push down to that area for some support, and maybe we can round off the end of the week with a nice bounce off of that monthly support to end the month off of. So right now, range, buy low, sell high. Over on crude oil, we started off with a beautiful bear trend. Well, we started off with a horrendous looking little range there, but we did break down for a beautiful drop lower. Now that drive lower, it kind of subsided. We ran into a bunch of support on the 60-minute chart and daily chart where we were filling a bunch of unfilled gaps that had been open for several days. We finally filled those gaps. And since they filled, we never looked back. It just continued to rip higher here on crude oil. So obviously, that was a major objective for a lot of traders, and now that that's out of the way, we can continue back on our merry way to the upside. The one big thing that really kind of stands out here, we're not really getting out of this spike that we had down into the channel. The channel seems to have tried to break out, but completely failed, and now we're just grinding around the highs and lows. They tried to break out the lows, that failed, and now we're rallying higher. So the anticipation is, with a failure to break out of the highs into a failure to break out of the lows, you expect them to attempt to break out of the highs once again. The major objective on this, on a zoomed out type of picture, I would love to see us get back above this kind of area of support that you can see chopping through here. We are above it right now, but I mean, get away from it like this, right? Get away from that level. And the major objective after that would be coming into this area of resistance up here. We've had several times where we poked our head just above 50, got into about 50.20, and dove right back down again. Same thing here. We hit it and slammed lower. I would love to see us come back to that area again, and then looking for a sell to, once again, slam it lower. If it ends up getting up there and breaks out, we may even be able to use that as an area of support. But overall, we've got, well, the bears still in control. kind of. But the buyers right now own the market in the short term, so we've got to give it to them. And again, looking for higher prices to sell, which may be a while, might not even hit this week. And then finally on the S&P, very, very range bound on the S&P. I mean, grindy, I feel like, is an understatement. We had a just huge amount of back and forth, not really a whole lot going on, likely due to a lot of the news that was coming out, and Draghi on the microphone, and this and that, and a bunch of surprise news, and blah, blah, blah. It just kind of threw the markets around, and we got stuck. Now, this back and forth, we did kind of stall out with a range between 23.83.75 up to the highs. I mean, best fit area is 86.5, but the highest point at 87.5. And then we fell down to the lows, where we then put in a nice area of support. 80.75, I would say, is the high point, but you do also have 79.5 down to 78.75. And the market just seems to be finding a balance inside there. They tried to break out a little bit earlier today. They have failed and pulled right back down to that same area of support at 83.75. And now it looks like we're just transitioning back into this exact same range again. So we have a multi-tiered range. We have a high edge and a low edge, and we know what to do with ranges: buy low, sell high. And in this case, you got 2 attempts at it, right? A bunch of different little ranges forming. So play it safe tomorrow on the S&P. Today was definitely stalled out, having a hard time getting anywhere. And, you know, maybe tomorrow, going into the end of the month, we can get something going. But for right now, we're in a range. So that's going to do it for the outlook. Looking at the economic calendar for tomorrow, we do have some news going on. Tomorrow morning at 4:30 out of the UK, we have the GDP year over year and quarter over quarter. The year over year forecasted 2.2%. The previous is 1.9%. Going a little bit further down to the GDP quarter over quarter, they're forecasted at 0.4%. The previous was 0.7%. Then at 5 o'clock, out of the Euro side of things, we have the CPI year over year, forecasted 1.8%. The previous is 1.5%. For the US and Canada, we both have news at 8:30 tomorrow, and that is going to be the GDP quarter over quarter for the US and month over month for Canada. 1.2% for the US is the forecast, 2.1 was previous, and for Canada, 0.1% is the forecast, 0.6 was the previous there. So we do have a little bit of news going on, but early in, early out. The news dies off pretty quick. After 8:30, there isn't really anything. So could be an early in, early out kind of day, but like we always say, make that plan, trade the plan, follow the rules, and you should be all right. Until the next time, have a good weekend, and we will see you all in the new month.